Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look. If you want to follow me, it's at Finance Finance. And if you want to join our community, finding-value.com. It's where I dive deeper into all these sectors, looking for potential investment opportunities, and deploying strategies that I share with everyone in the community. May Day coupon code is still active, and you get 50% off the first month and first month only. Or you can apply that coupon for a yearly membership and get larger savings and larger savings applied into the future. QE Infinity builder DR Horton with a big miss on earnings, citing affordability issues. And this was before mortgage rates rose after the rate cut. Stock is down 9%, so they are experiencing affordability issues. And I think that's kind of obvious. We've had a very big run in interest rates, specifically the 10-year yield, which correlates to mortgage rates. And mortgage rates are up over 7%, and they are weighing on affordability for most people. So I do expect, if rates to remain high like this, that it's going to impact a lot of the home builders and maybe even impact the housing starts at some point here. Jesse says this is tremendously bullish for gold, silver, copper, and other commodities. China is planning a 10 trillion yuan in extra debt for fiscal stimulus. Oil commodities rebound, says Zero Hedge. And then oil eventually started heading lower again. But if this stimulus is coming into the system, it's going to impact gold and silver first. Oil and a lot of the other commodities are going to be impacted a little bit behind it. So don't think that this money coming into the system will go directly into oil first. It's going to take some time to work its way through the system. Patience. Liz says Nebraska had the highest average annual home insurance premium cost for coverage of $300,000 in October at $5,655, with Florida coming in second at $5,527. We were talking about this, people on the website and myself, about home insurance costs. And I'm in an area where I think I've got a pretty good area of home insurance, property taxes, cost of the home, all of those things. Because really, it's the ultimate cost burden to the person that matters. Now, home insurance rates do fluctuate quite a bit. Nebraska and some of these other areas in the middle here, we get a lot of hail. We get a lot of hail in Colorado too. That's why ours is $3,222, and actually, my home insurance is like exactly that price. I think $5,655 in Nebraska, and I'm sure all these get just smoked with hail and tornadoes. So there's a lot of damage in that area, hurricane damage here, so that makes sense. But I mean, if you're in Wisconsin, looks like Wisconsin's one of the lowest areas. Same with Oregon, Nevada. Now, Nevada is probably the cheapest spot to be of any state. That's what I'm coming to the conclusion of. It's got cheap home insurance. It's got cheap property taxes. It has no state income tax. I mean, that's probably one of the best areas to live in. And I would say the weather's not that bad there either, depending on where you live in it. If you're up in the mountains, it's not too bad in Nevada. A little bit of large swings, much like where I'm at, but it's not too bad. But I don't know. Looks like Nevada would probably be the best area to live in for cost of living, would be my guess. One of the best. Fed is losing the bond market. Need to stop QT and start QE. And that is, I don't normally read too much into a single day's market action, but bonds are falling on a day when oil is down 5% is a pretty bad sign for the long end. Yeah, so he's saying the Fed's losing the bond market and that they have to step in and do QE. Now, if they step in and do QE, they're going to transfer that pressure in the bond market into the currency market. and you're going to see the dollar fall because you're going to artificially hold rates down, and you're going to print a bunch of money to do it. So the dollar is going to be the sacrificial. They're going to sacrifice the dollar here potentially. My thesis, as though gold and silver still retest their breakout levels before moving higher, is becoming less likely by the minute. Both precious metals have broken out from their short-term consolidation patterns, preparing for another leg higher. In over 10 years of following them, I've never seen them so strong. So gold breaking higher there, and then we also have silver breaking higher. And they look good to continue on up. But we're in the right market conditions, and that's what he hasn't seen. He hasn't seen the right market conditions for these to continue to go up under. So the market conditions is what forces money into certain assets. That's what you need to learn. Coming out of Logan, not 2021 or 2007. This is inventory levels and where they're located at this exact moment. Look at how low our inventory levels are. Now, some people say, oh, well, house price is going to crash 30%. You cannot crash 30% across the board if your total housing inventory levels are this low. You need to build back inventory to do that. This is the big crash, is when we got up here and homes were plentiful. Also, we had a lot of forced selling. Forced selling really drives prices lower because banks just want to offload them. And they knew that more and more were coming. So they had foreclosures, and they said, just get rid of them. We didn't have that down here, guys. Completely different market condition. So I agree with Logan here. Uranium's third bull market has room to run. So this is uranium. Bull market number one was 1970s oil embargo. There it is. We've got the bull market two, pre-GFC commodities boom, the blue line. And here we are in bull market three in the yellow line, race to net zero. And I think we've got a long way to go. We do. We've already come off the bottom, though. We're not, coming out of the total bottom. We have some momentum. We have a falling wedge that will break into the upside. So everything still looks good in uranium. And there it is compared to the previous two bull markets. We also have the same market conditions, too. Expansion phase of real estate in all of these. And everything's present. This breakout happening in Bitcoin means a lot for the equities market, and Bitcoin's starting to break to the upside. We've got Solana, and I don't really know much about Solana, but Bitcoin is breaking to the upside. And that might be an indicator of more liquidity coming into the system. Jeff says, of the 100 largest companies, the S&P 100, there are 25 who are trading for more than 50x reported earnings. Meantime, there are 0 companies trading for less than 10x earnings. So there's no companies below 10, 0. And there's a whole bunch, 25 to be exact, over 50x. So this is historically pretty expensive. There were times where the entire S&P 500 was trading below 10. Like, not all of it, but a lot of it is what I should say, at market bottoms. Forecasting future supply and demand in the current environment is a waste of time because we cannot even measure what's happening in the present, says Ilya Bushov, the former president of Koch Global Partners. So they're talking about oil and some of these commodities, and they say forecasting future supply and demand in the current environment is a waste of time because you can't measure what's going on in real time. Willpower is overrated, especially with money. Temptations to spend are everywhere. So how do you overcome that? Studies show implementing a system that automates good money decisions is highly effective. The key, a system that also gives you the freedom to spend on what you want. Your system might set up automatic transfers like 10% to retirement, 5% to saving goal, 5% to a stability fund, 60% of your take-home pay, so you have 20, 35% to spend on whatever you wish. No guilt, no shame. All because you made one smart decision to automate your finances is what this is saying. I can tell you what I do. and there are a lot of people on the website that I think are similar to me. When I get paid, I get excited to invest it. I feel like I'm investing in my future self. And that's where I struggle to spend money because I want to continue to pile it away, make more money with it, and then not worry about the future. And I'm all about easing my mind. I don't care about the materialistic crap that people accumulate. I don't care about status. I don't care about what people own, what they have. I don't care about the people that they see. I am really difficult to impress. Now, the things that do impress me are things that people cannot do. Someone who is really, really smart, that impresses me because you cannot just go buy it. I also think athletic ability can be very impressive. Someone who's got a 45 or 40-inch vertical, that is pretty impressive. Not everybody can do that. Not everybody can run a 100-meter dash in under 11 seconds. Pretty impressive. So those are the things that I get impressed by are generally things that people can do with their mind or things that they can physically do. And maybe it's making something really complex that could be pretty cool too. But that's what impresses me. Going and buying something, whatever, that doesn't matter. I do understand that it's genetic trait in females where security is a huge portion, but I'm not really trying to impress anyone with that. So, but I do understand, some of it is genetic driven. Brandon says this Jesse Livermore quote perfectly describes the precious metals commodities bull market. It never was my thinking that may be the big money for me. It was always my sitting. Men who can both be right and sit tight are uncommon. Pure wisdom there. If you want to be part of the website, I can do both. I can be right and sit tight. And I'm showing everyone entry points at very good entry points across the board. Lithium, iron ore, diversified miners, copper, gold, silver. I get in there and I sit tight after I buy, and I continue to buy at what I consider to be opportune times technically. So I find good companies fundamentally and technically. I get good entry points, and then I buy them. I try to buy them in size if I can, and then I sit tight. And it's very rare to find people that can do that. And if you are struggling to do that, we can help you as a group. You can get on the Discord. You can ask, hey, what are you doing here? What's going on? It'll help you. That's what I'll say. It will help. Silver just crossed 70 RSI on the monthly chart. The last time this happened was in 2020, 2010, 2008, 2006, and 2003. Each time silver went on a rampage. So we could go on a rampage here for silver. We could really start to rip. We're gaining strength on the relative strength indicator. We've broken out of the handle of the big cup and handle. And this is looking pretty dang good, guys. Now, is there silver opportunities to invest in? Some of them, yes, are still there, but they're eluding us, guys. They're starting to run, and they're becoming less and less frequent for the bottoming action. They're really starting to run here, so keep that in mind. The TSX venture is breaking out. The junior miner mania is confirmed. So this is actually more data with this too. We've got a shoulder, head, shoulder, and then we've got a shoulder, head, shoulder. So I call this a dream within a dream. It's a dream chart pattern within a larger dream chart pattern. There's some of these, and this is what you want to do when you look for opportunities. You want to find a big picture view like this big one, and then you drill in and you find another chart pattern, and then you drill in again, and then you find another one. And I call that a dream within a dream within a dream. It's almost like that one movie. Oh God, what was it called? It's like with an eye or something, where they go within a dream within a dream within a dream. Whatever the name of that movie is. But if you guys know what the name of the movie is, put it in the comment section. Inception, I think. I think that's the name of it. But shoulder, head, shoulder, shoulder, head, shoulder, and then if you had another one here that was squeezing up, I consider that to be a dream within a dream within a dream. So that's looking really good. Did something happen at 8:30 a.m. to oil? We came on up and then it sold on off, almost like they were waiting there to kick it in the morning, kind of like silver. I wonder if silver and gold, what they did with silver and gold for a while, I wonder if they're doing that with oil. And they're trying to control, this is my guess, they're trying to control oil to the downside to get interest rates to fall. That's my guess. That's my guess. Kobayashi says the market's getting even more concentrated. The market cap of the largest U.S. stocks is now 750 times larger than the 75th percentile stock, near the most since 1932. Over the last 8 years, this difference has tripled. Furthermore, the market is currently even more than it was during the 2000 dot-com bubble. As seen below, the largest U.S. stock in 2000 peaked at 6,000 times larger than the 7th percentile stock. The only other time that current levels of market concentration were seen was during the Great Depression. Truly insane. And there's the concentration here. On 32, 39, 64, 73, 2000, 2009, 2020, and 2023. Freight futures AM update. Dry bulk was up a whole bunch. Capesize up 4%, Panamax up 2%, and then VLCC was down 1%, Suezmax was up 1% for the tankers. Energy, Aramco CEO, we are looking at oil demand average of 104.5 million barrels per day this year. Q4, we're looking at close to 106 million barrels per day. We are anticipating an oil demand growth of about 1.5 million barrels per day next year, is what they are projecting. So no demand destruction projected. Capital rotation indicator now reading 10 out of 12, the fourth signal in 100 years. Stock market's elevated risk of a 50% fall. Gold elevated likelihood of doubling, then doubling again. We've seen this chart before, and we are continuing to break down in favor of gold versus the S&P 500 and Dow Jones. So this is really good for a commodity bull market, guys. We are entering this commodity bull market and getting into it. So it looks fantastic. Eric Nuttall says, Goldman Sachs, the continuing tightening in our trackable net supply over the last month and the ongoing draws in our OECD commercial stocks now imply that Monday's sell-off may be overdone. The gap between the Brent 1-month, 36-month, and its fair values widen again to $8 a barrel. And this is their forecast for global oil days of supply going forward, as we've eaten through a bunch of inventory and are tracking potentially to go slightly lower and then sideways for next year. Razor Oil says, random generalist on X, you're an idiot. Canadian oil stocks didn't do anything for 5 years. Time value of money, blah, blah, NVIDIA, Bitcoin, blah, blah, 6-handle, OPEC spare capacity, but the Saudis and China demand, wow. Meanwhile, low cost of supply, buyback strategies, oil stocks, over the past 5 years is up 213% for Imperial Oil. Up to the right, buying back shares. This is what can further increase share returns, is buying back your shares. And a lot of the Canadian oil producers are doing that. There are ones that have absolutely smoked 213% that we are a part of on the website. And their charts look like this, left to right. There's a couple of them. And we are buying another one that's down right now. We are buying another one on there. Very good opportunity right now. Coming back, AJAC. It says, past the age of 40, you realize most people give up on learning anything new outside of their profession. No languages, no hobbies, no sports, no instruments, no disciplines. People become boring and increasingly predictable. What are some skills that you learned later in life? Well, I'm learning investing right at that 40, 30, late 30s, early 40s. I transitioned into basically my 9 to 5 to something else, which is I've been saving and investing that entire time frame, but I've dove into it. I know how websites are created, web pages and stuff like that. I didn't know that before, and I created that at age 40. So I've had that website up for which I've had help to create it, but at least I know what goes behind it, and I've learned some stuff about it and payment systems and Stripe. I opened a business, which I had to learn about that and go through learning how to do, fill out all this stuff for state and federal and all that crap. I've learned a lot. There's other things that I'm learning, and there's other things that I still like to do when I was young. But you got to keep in mind, people in their 40s also usually have kids. And when you have kids, you're doing stuff that they are discovering. So you're teaching them things that you've learned that they are, going to learn, like ethics and sports and how to do things, how to become a good person, cleaning up after yourself and how to make things. That's what you're doing. So I think that's still learning. And it's not necessarily that, people who don't have kids, they kind of just say, oh, well, what are you learning that's going to benefit you? They're very me. But when you have kids, you kind of have to let that go. You have to sacrifice some of the things that you want to do for the betterment of your kids. That's the way it is. Tavi says, let me put this another way. How can the Fed avoid cutting rates in November given the current levels of federal and local interest payments? More importantly, which central bank has the greater urgency to cut rates? How could this be positive for the US dollar? It's not, is what he's getting at. There's US dollar, public debt net interest payments to GDP, 4.6%, higher than all the other ones. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content, subscribe to the channel, subscribe to the website, and we'll catch you next time. This is Finding Value. Oh, and just as a reminder, I will be releasing a midweek update today, so look for the midweek update for those that are members. All right, guys. Catch you later.